Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week, we have put the spotlight on term insurance and why this purest form of life insurance is something that everyone needs to consider if you have dependents. Well, let's kind of sum this up in terms of the important things to ask before buying that term insurance policy. So, gentlemen, just to quickly go and recap, first thing is how much is the cover you need. So apart from X times your annual income, is there any other methodology that needs to be adopted?
People typically look at human life calculator, life value calculator.
Human life value calculator.
Yes. So it's a question of, at different stages, what are your requirements and obligations? Hence, are you well provided for is the answer that you typically get. If you were to simplify it, every stage of a person in terms of getting into his starting his earning stage, number of dependents, how does it change over a period of time, that is he or she getting married, and then the next set of set of asset acquisitions, then the children, then the education and so on, and then building on for, let us say, your future in terms of a retirement or a wealth creation, etc. So that's the journey that a human traverses through. In that situation, what is the requirement? What have I provided for up to a certain stage? What is left to be done? And that's where you keep kind of reassessing and saying, okay, fine, this is the kind of amount needed to really secure the future for my near and dear ones. Okay. So have I done enough? What more to be done? That's the evaluation. So
you can go to these. I'm sure they're available online,
it's
right?
Available
you can go and sort of feed in the details and then arrive at a ballpark number that you would need. Rhishabh, what else? So one is the amount of cover. Then what are the other things? What's the checklist that I should definitely, get answers to before deciding? Because this is a lifelong commitment. Literally, I'm with the insurer. The policy will be with me forever. So what do I need to ask?
I think three critical things. One is how much cover. Two, how long is the duration you want the cover for? Ideally, you would want to cover till your retirement, right? Let's say we are talking about a 30-year-old who is married, has kids. Till the time your kids are settled, they're married, they're well educated, I think that is what your liabilities are supposed to be. So practically cover till 60, 65, 70 is practically what you should be buying for. So that's the second most important factor that you should consider. Third big factor is what kind of riders you want to take or what kind of features you want to include, because that will decide what product you finally end up buying.
Okay, I want to come back to this point in just a bit on the features, because I know there's a fair amount of innovation happening in the industry. But before that, a very valid query coming in from another one of viewers. This is Rohit. And once again, he reaches out to us on one of the social media platforms. He's saying that he's having difficulty trusting his insurance company to honor claims. He says that I've paid the premium, I've taken the policy, but I don't know, and I've not hidden anything, but I'm not very sure if I can be confident that they'll honor the commitment when the time comes. I think this is an important question to ask as well. And Rhishabh, if you could take this up first and give us some examples. Again, these are not recommendations, but insurers who have a good customer experience, a good track record with respect to settling claims. Maybe some of the just industry names, again, not product recommendations, but industry names who've built that reputation that people can look out for.
Sure. I think the industry names are kind of well out there in the market. If we talk about the top insurance companies, SBI Life, ICICI Prudential, SDFC Life, Max Life, Tata AI, all these kind of cover and have a good claim settlement ratio. Most importantly, I think it is very important for the consumer to be aware why their claim may not be honored. The only reason the claim may not be honored is because they have not disclosed something, and hence the insurance company may deny the claim because they feel that it was paramount for
like
the customer's
what? Give us an example.
It could be related to lifestyle habits. Do you smoke? Do you drink alcohol? It could be related to any kind of pre-existing disease. Do you have diabetes? Have you undergone a surgery? Those kind of details are paramount for the insurance company to decide if they want to give you a cover.
Okay. So your thoughts on this, and also because, one is paying that premium and you're hoping that you'll get the service in return. From the customer end, can we do anything to ensure that there is no bad experience by the end of it?
I'll pick up from the last point that you made. It's about the disclosure. I need to know that I'm taking this term plan for my family when I'm not going to be around. So which means I need to be completely transparent in responding to the questions, which is typically known as health questions.
Okay.
Now, those health questions ask all the basic questions. It's not a complicated thing. It's for a layman to respond. Have you undergone a surgery? It's a very simple thing. We know whether we undergone a surgery or not. and whether you smoke or you don't smoke. And disclosing that actually is ensuring that the family gets the money when I'm not there. So the transparency in disclosure is paramount.
Sure.
And then comes the next part in terms of looking at the company that you spoke about. As a customer, I need to do that.
Got it.
I need to be fair in terms of the disclosure. And then I look at the brand, whether it's a trusted brand, whether the claim settlement ratio is good. And then come down to my decision saying that, okay, fine, this premium seems reasonable. And then go for the point in terms of how much of a cover.
Speaking of reasonable premiums, you got me to the next question, the cost involved, right? And we all know that life insurance premiums, health insurance premiums have all gone up since COVID because of what we all endured. But give us sort of a ballpark rough estimate in terms of, let's say, a 30-year-old or a 35-year-old, reasonably healthy person. You know, today, what would be the cost of a term plan? And are these costs going to go up, likely?
See, the one is in terms of COVID very clearly, which brought all of us to an evaluation point, and the reinsurers evaluated, and hence the cost went up, and the premium pricing got impacted accordingly. And the cost will keep going up depending on the various factors. In terms, one is inflation, the other one is in terms of the mortality experiences, and so on. But let's say a 35-year-old wants to, let's say, give a 2 crore cover. And a safe assumption is 18 to 20,000 per annum.
Okay.
That's a good sum to go with, and he pays the premium for, let us say, another 25 to 30 years.
Okay.
And that's the amount.
And the premium is locked, so there is no
locked.
yearly inflation.
Absolutely,
Yeah.
absolutely. Yeah. So he is locked, basis the disclosure on the health question, basis his current state, current health, and then he continues, and he's assured that that amount will reach his family.
Yeah.
Once he's known that, he's disclosed everything clearly and cleanly.
Absolutely. So, Rhishabh, sum this up. Final checklist, everything that you need to be aware of, and also the riders that you might want to look out for when you're looking at buying that term insurance plan.
Ensure that you have the right cover, because that is the most important thing. You have to cover all your liabilities. Second, choose the right term or the tenure of the plan so that you are covered till you have any kind of liabilities left. Third, decide the right insurance company basis the claim settlement ratio, the premiums being asked for. Fourth, what kind of features you're looking for, what kind of riders you're looking for. There are some very interesting riders that come in the term insurance plan. You can buy an accidental death rider, which basically ensures that if your death happens because of an accident, you get an additional sum assured, which means that if you bought 2 crores of base sum assured and you bought 2 crores of accidental death, you get total of 4 crores. And the premiums are much lower. Because
so you can enhance your the payouts and the coverage by paying a small additional premium.
Exactly.
So that's one important rider. Any other riders, any other newer policy features we should know?
Another important rider is the waiver of premium rider, which basically ensures that if something were to happen to you from a critical illness or a permanent disability, you will be indisposed and your future income stream may suffer. If your future income stream is going to suffer, you may not be capable of paying the premiums that come in the future. And hence, waiver of premium kicks in. It ensures that all your future premiums are taken care of by the insurance company and your cover stays intact.
Okay, I think this is very helpful information and good information to keep in mind. Gentlemen, thank you so much for joining in. Lots of food for thought over here. I think our viewers can go back, reflect on this, ask the right questions and make sure that they have complete insurance coverage when it comes to protecting their loved ones. Thank you so much for joining in. Keep sending us your comments, feedback and queries. We'll see you with another brand new theme next week.
Let's talk money